Okay, that is your setup now. We want to turn back to President Trump and his new comments for Fed Chairman Jay Powell and the prospect of lowering interest rates. The president speaking on NBC's Meet the Press over the weekend.
Well, he should lower them, and at some point he will. He'd rather not, because he's not a fan of mine. He just doesn't like me because I think he's a total stiff. And, it's just one of those things. He should lower them. And I wish the people that are on that board would get him to lower, because we are at a perfect time. It's already late, but he should lower interest rates.
Do you rule out removing Fed Chair Jerome Powell?
I'm not, I get to change him very quickly anyway. It's in a very short period of time.
In 2026. You're not going to remove, you don't have plans to remove him before 2026 when his time's up?
That was a total, why would I do that? I get to replace the person in another short period of time.
The president's comments coming as the central bank prepares for its next policy decision this Wednesday. Joining me from Washington is Nick Timiraos, chief economics correspondent at the Wall Street Journal. Nick, good morning. Good to see you.
Thanks for having me, Frank.
All right, so Nick, the president had some really sharp words. Seemed kind of like personal attacks on Jay Powell. I know he's talking about policy, but just the words called him a stiff just there in that one. Do these comments from the president, the fact that he's not going to look to replace him, does it have any bearing on this upcoming Fed meeting? By the way, the CME FedWatch tool has a 98% chance of a pause. Does it have any impact on this meeting?
No, Frank, it has no impact at all on this meeting. I expect nothing really out of the Fed at this meeting. I thought the most interesting comment in that interview, apart from the point that he is not going to try to replace the Fed chair, notwithstanding his terminate comments of a couple of weeks ago, was when he said, I wish the people that are on the board would get him to lower, because I think that shows that just changing the Fed chair does not change monetary policy. This is set by a 12-person committee. There is nobody on the rate-setting committee right now who wants to lower interest rates. And so, this is how the president thinks he can get the monetary policy he wants, by badgering the Fed, by making very public statements or criticisms about what he thinks interest rate policy should do. But ultimately, that isn't going to move the Fed if the arguments aren't good enough. And right now, the Fed thinks they still have some inflation risks, especially because of these tariffs. So that's why they're going to sit on their hands here.
All right, so Nick, I'm really glad to have you here, because I think you might be one of the best people to try to parse all the different data points that we're dealing with. So you're talking about tariffs. Of course, we don't know the full impact of those. It's still kind of unwinding as we speak. Weaker than expected GDP report, a lot weaker, showed the economy in contraction. Then stronger than expected jobs report. Then you look at PCE, the the core was in line at 2.6. The headline was a tick hotter than expected. What does this all mean for the Fed? I think they're probably trying to figure it out. What do you think it means for them? How do they parse all these different data points that are sending different messages?
Well, so the March inflation numbers were very good. If you look at the month over month, you couldn't have asked for a better inflation report. And so you do have the president and some of its advisors saying, well, you say you care about inflation. What are you doing here? The numbers are good. And if you look at what's happening with energy prices right now, there are reasons to think headline might not be very different in April or maybe even May. But the concern is, you had that chart up on your screen just a few minutes ago about the costs of cars going back up. Tariffs could raise prices. They could also erode margins here. And so the Fed sees this risk of prices going up. They see what some of the inflation expectations measures are saying, and they're not going to be able to cut preemptively into that. They're facing inflation running over their target for the last several years. That is different from when they preemptively cut interest rates in 2019 to cushion the hit from the first trade war with China. And so if you think you can get the Fed to cut interest rates by slowing down the economy, it's just a much dicier proposition in 2025 than in 2019.
All right, so we have the Fed decision, and also we have the Jay Powell press conference. What tone are you expecting from Jay Powell? Hawkish, dovish? What are you expecting him to come out and say with so much uncertainty in the market? I know you said that inflation report was better than expected, but the GDP report, I think that caught a lot of people off guard.
Well, the soft data tell you that we're going to, we had a lot of front running of the tariffs. That's part of what's creating these unusual distortions in the GDP number. What I would expect from Powell is pretty much the same as what he's been saying for the last couple of months. The Fed is not in a place where they can guide right now They don't know what's going to happen with the unemployment rate 90 days from now. They don't know what's going to happen with inflation. You can have a good guess. You can have different scenarios. So I think they're adopting a meeting by meeting posture. They're not going to rule anything out. They're not going to rule anything in until they can see how the dust settles. You know, when the Fed says that they're not going to cut interest rates, we're looking at an unemployment rate that was basically flat last month. If the unemployment rate were to move up very quickly, then I think your outlook changes. But until that happens, it's just going to be very hard for the Fed to say what they're going to do or what they would do.
Nick Timiraos from the Wall Street Journal. Always good to see you. Thank you very much.
Thanks for having me.
All right, coming up here on Worldwide Exchange, oil facing some fresh pressure this morning. We're live in the Middle East with the latest on these new moves by OPEC Plus around production that's driving the action. Take a look. WTI pulling back about 1 3/4%. Brent crude a similar downside move. Stay with us. Much more coming up.